how to gain an edge trading earnings. My name is Don Kaufman, and you are watching a TheoTrade presentation. Again, we're going to go into quite some detail. Obviously, earnings season is once again approaching, as it does quarterly. Before I get too detailed, I'm going to throw up a risk disclosure. We are not financial advisors or a broker-dealer. The reason that I predominantly like to put this up there is because, well, the vast amount of my career I actually spent in the brokerage side of the business. Some of you may recall this is actually my 5th year outside of the brokerage world. With that, next thing, copyright disclaimer. This is ours. This is not yours. One of the other things I put up here, and this is important to me. If you ever need to get a hold of me, okay, or anybody at TheoTrade after this evening, we're based Scottsdale, Arizona. Again, it's where we live. If you ever need to get a hold of us, okay, right here, support@theotrade.com. We use what we call a common inbox. So just put, Don in the heading. That's Don in the heading, and that email will undoubtedly go to me. So just wanted to throw that up there. You can give us a call. All right, onward and upward from there. Listen, this is why you're really here tonight. All right, there are some very large takeaways that I want to make absolutely sure, okay, that everybody's comfortable with by the end of this evening. All right, when I say this is why you're here, listen, by the end of the webcast, I want you to walk away with the following knowledge. Number 1, discover expected move, okay, and more importantly, how to use it around earnings. Number 2, learn how to really the efficiency in the markets can really be beneficial to retail traders. By the way, retail traders, that's a word that maybe you've heard of, maybe you haven't. I'm just going to highlight this for a second. Effectively, what I'm saying on that particular front just simply means, listen, you're not a professional trader, and retail traders always kind of think to themselves like, I'm getting taken advantage. This is not right. But efficiency in the markets used correctly, okay, can be your greatest ally. And it can be an incredible resource in all aspects of your investments, retirement accounts, cash accounts, futures trading, everything. All right. Number 3 over here, learn. Okay. What weekly strategy can take very, very minimal risk and produce astonishing returns surrounding predictable, or what we're going to term manipulated movements. And manipulated is a very, very large word in this business. Last but not least, discover, okay, a unique method you can use surrounding earnings announcements. All right. So, throughout the course of this evening, I'm also going to ask a couple of questions. How many of you guys have been involved in and around some earnings or earnings trades in at some point, okay, in trading? Or better part is, how many people here are brand new, have never really traded before? It's okay. All right. Feel free. These are not rhetorical questions. Chime in at any time. All right. While you're doing that, I'm going to come in here and, hey, listen. Our gift to you tonight is completely free. If you stay with me to the end of the webcast, we're actually going to provide you an earnings expected move indicator, right? And what this does is it provides expectations of stock price movement surrounding earnings announcements. Okay, on these webcasts, you stay tuned in, okay, and we will provide you, again, this indicator. There's absolutely no cost. It's a $197 value. I'll show you the exact indicator right here, right now. Basically, what you're looking at right now is a screenshot of JP Morgan. Now, JP Morgan, and the screenshot was taken, today. It was taken a little bit earlier today. And what it's doing, and here's the indicator itself, and these lines, which I'm highlighting, okay, it's handicapping, all right, how much JP Morgan is going to move, okay, surrounding its earnings announcement. And I'm going to cover some of that this evening. You're like, how could it possibly know what JP Morgan is going to move? Okay, and that's a portion of what we're going to discuss tonight. But it uses options markets to determine, okay, the stock price movement before an earnings announcement. I don't want to stress that to you guys. That's some, of what we're going to be discussing tonight. But this indicator, okay, stay with us right to the end. And I'll literally give you, okay, the web address to go grab this particular indicator from. All right, with that, a couple of housekeeping items, and we'll be off to the races. And housekeeping, this is a skill set tonight. You got to pay attention, because I'm going to tell you right now, pretty much after this slide, people, it's going to get serious. So I say, you shut the door, turn off Skype, turn off chat, whatever else might be distracting you, close Facebook, kick kids out, silence the phone, the grandkids, whatever you got in there. The dog can stay. It's a dog. It's got to stay. Listen, in all seriousness, you took the time to be here. This is important, okay? Focus on being here. And that's something that, people in a lot going on. You're looking at this on a mobile device, probably driving home. It's horrible, okay? Take the time, because what I'm going to do in a tremendous amount of this webcast here is take you through a very definitive skill set. All right, with that, all right, a little bit about me. I watched order flow for 15 years. It's kind of why I'm here. All right. I mean, what's order flow? I mean, listen, first of all, I grew up around traders. I had family that traded all the way back to the 1970s. An uncle specifically that traded. He built a trading firm in Chicago. At one point, he had owned over 500 seats in exchanges worldwide. It got me interested in trading. I mean, listen, anybody that has a family member that had that kind of success, obviously you're going to be interested in what they're doing. So I got out of college in the late 90s. 3 weeks after I got out of college, I got invited to trade in Chicago. So I went. Okay. Shortly thereafter, I was invited to a startup brokerage firm nobody had ever heard of. It was in 2001. It was called Thinkorswim. I was there in 2007 when we took the company public. Then I was there, of course, in 2009 when the company was acquired by TD Ameritrade. I then went on to actually run education for TD Ameritrade from roughly 2010 to 2015. I ran education for over 7 million clients. So I built education, modules, but I ran really the entire education division. Most importantly, and what you're going to hear about a lot tonight, I had access to all of the order flow. And that's where people don't really understand order flow. It means I had access to everything you did. Okay. We study trades. We know what works. We know what doesn't work. There's only a handful of people in the entire world that had that kind of access to that kind of large data set, which was, 7 million clientele. What you learn here this evening comes from watching billions of dollars in others' mistakes and really the knowledge of what works best for retail traders. That's a little bit about my background. Over the years, I've done a lot of different TV appearances. This is actually one from August of last year. This was actually on set. That's actually TD Ameritrade TV. This is one from, is that one recent enough? That was yesterday. So I just Skype chat in. That's me. That's Ben. It was literally yesterday. This is a couple of years ago. It's probably one of the more memorable experiences from doing TV. It's myself against the shark himself, Mr. Wonderful. So, by the way, I was the short in Apple. He was the long. And actually, at that time, a couple of years ago, worked out quite well for me. So, as I said a moment ago, listen, from this point forward, it's about to get serious. All right. Price movement defined. So we're going to start talking a little bit about price action, markets, historical volatility. You guys okay with that? All right. As stocks move, traders and investors alike can measure those movements after the fact by what is termed historical volatility. I mean, I can't stand the definitions here. Historical volatility, the annualized standard deviation of past stock price movement. That just doesn't do it for me. Effectively, historical vol, it tells you, okay, the rate at which a product is actually moving based on previous days or weeks of data. So how does historical volatility help you? Okay, historical volatility, it's like driving 100 miles an hour while looking through the rear view mirror, right? It's telling you everything that's going on behind you. You're like, it's okay. There's nothing in front of me. Okay. Or you could be driving like a Tesla and autopilot. That's even more scary, right? But that's what historical volatility does. It sees everything behind. And let me give you a great example of that. So I think this is the perfect place to start. Well, what you're looking at on your screen right now, this is Netflix. Is that volatile enough for you? It's Netflix. And all I wanted to show you is that earnings, they're coming. Right now, earnings are coming. They're right around the corner. And yet you can't see it in the chart other than it highlights like right here. That's earnings, right? Like seriously, that's it. That's your earnings coming. That's that little icon over there. But what I'm getting at in this particular case is you're blind. Okay? You're totally blind. Listen, Netflix just prior to earnings, okay? Right? And the historical volatility is low, leaving a trader and or investor blind as to the imminent risk of the earnings announcement. Now, what I am going to get to here in very short order, okay, is future risk. Okay. What I want to get to this evening, almost immediately, what's going to happen here, right after the earnings. Is there any way to decipher that? Absolutely, unequivocally, yes. We have what we term, okay, a market of foresight. Like, listen, looking back is great. Provides tons of insight, right? If only, though, you could produce foresight in the markets. Enter options markets. Now, hey, listen, this is the first time I've said this really tonight. Options markets. We're going to talk a little bit about options. Is that all right with everybody? Because I know that some people are going to come out here this evening and have had absolutely unequivocally no experience in the markets, or they've had no experience with options, and the minute they hear the O word, he said the O word, okay, they usually kind of tune out. Don't tune out. If you trade stock today, you have to understand options. Plain and simple, unequivocally, you must understand. I'm not telling you that you have to trade the options market. I'm not. But I will make the argument, okay, till I am blue in the face. If you don't understand options, you are blind to the risks that are right smack in front of you. And I'm going to show you that. Most view options as the ability to take a shot. That's why people think of options. They're like, yeah, I think I'm going to go, it's going to go up, it's going to go down, okay? And and you're like, oh, I can get bullish or bearish and I don't have to trade the stock. But people, there's so much more, okay? Listen, tonight, we're going to view options as placing a price tag on risk and future moves within a given stock. Like if you think about that for a second, putting a price tag on risk. Well, here, okay, options are your future. Like, why is an option trading for $3? You know, the thing, even if you guys don't know about options, and please, if you're joining us this evening, okay, you're live, you're here. This is an interactive session, all right? Have you had some experience with options? It's okay to answer that one. Have you had some experience with options? It's just a Y or an N, okay? I'm gonna get people to answer if it kills me tonight. I've had a lot of caffeine tonight too. So, for those of you that have had experience with options, fantastic. Wow, it's actually the vast majority. I think most people will kind of get it. Doesn't matter whether it's calls, puts, okay? For those of you that have never had experience with options, listen, options, they have expiration dates. Options could be good for a month, they could be good for a week, they could be good for a year, they could be good for 3 years. But here's the whole key. If an option, I'm just going to give you an example. If an option is good, for example, for 1 week in time, and I'm going to throw a couple of examples out to you throughout the course of this evening. So if this option is good for 1 week, is that thick enough? This option is good for 1 week, and it costs $3, $3, okay? What do you think the option is doing? It's putting a price tag at risk, okay, to the end of this week. That's what option pricing is about. It's a $3 option. You're like, why is it trading for $3? Because there's X amount of risk inside of the next week of trade. Does that make sense to you? So what I'm trying to get you to see, before we even go any deeper, but trying to get you to see, forget about what you think about stock price movement. I don't care. Neither do the option markets. but embedded in an options pricing, it's the implied future move of a stock. An option's trading for $3, okay? Because the marketplace thinks it can move $3, for instance, higher, or, for example, $3 lower. Got it? That's all I want you to understand at this point. All right. If we know what to look for in the options marketplace, we can determine how far a stock or index product can move within a given period of time. Okay? Why are you not using this currently? Very few people use this. Okay? You need to get in the know of what is expected. Now this, what I'm explaining right now, is a very quantitative tool. You know, people talk about like different types of technical analysis. I got a MACD, I got a Fibonacci, I got my Bollinger Band. This is a more quantitative tool, okay? And I'm going to explain a little bit what that means while we get in the know. You may not know where the markets are going, but you can measure how far the markets can move within a given period of time. This normal fluctuation is what we term expected move. Now again, I don't want to scare anybody over here because I said it's quantitative. This is where you're going to have to start to learn something, right? You know, you're not going to get, follow the Fibonacci. Listen, I got your 618 right here. I'm not into that stuff, okay? You're going to use the option markets to handicap how far a product can move within a given period of time. Listen, expected move, it doesn't tell us which way the markets are going to move. It doesn't tell you like, are they going to go up or are they going to go down? Yes, okay? But the expected move does tell us approximate movement that a stock or an index product is likely to encounter within a very defined period of time. Danger, expectations. So allow me to explain a little bit about expectations of movement. All right. And we're gonna spend just a couple of minutes on this slide because one of the most important things to me is that you understand this, right? Like that, I want you guys to be able to take this away. Now I'm just going to use a rough and dirty example, and then we're going to go in here and we're going to do a real example. So here's a stock. By the way, I call every fictitious stock, okay, stock. And let's say stock is trading at $200. Stock is trading at $200. So this is a $200 stock. Now, on one side of it, right, and that's where the $200 stock is currently trading. On one side of it, we're going to have what we call a 200, okay, call. On the other side of it, we're going to have what we call a 200 put. Now, for those of you that have never traded an option, a 200 call and a 200 put, that's options, people. What is a 200 call? Well, a 200 call would give me the right, but not the obligation to buy the stock at 200. Okay? So if I went out and I buy a 200 call, let's do it. Let's go out there, okay? And let's simulate. I'm going to buy, okay, the 200 call, and I'm going to pay. Let's say that this one is good, okay, for 1 month of time. We'll start with 1 month. We're going to buy it, a 200 call, and we're actually going to pay $3 for it. Okay, so we're going to buy a 200 call. Why are you buying a 200 call? Maybe you think the stock's going to go up. But if you're going to buy it, you're going to pay $3 for it. And what happens at the end of a month if nothing happens to the stock price? Now, okay, you're going to lose your $3, right? You're going to need that stock to go up just to be able to break even. Just to be able to break even. Now, at the same time, okay, we're also going to fathom you could turn around and buy, all right, the 200 put. Now, listen, I am in no way, shape, or form, okay, indicating that we're going to buy or sell either of these. By the way, I'm not using that as disclosure. I'm using that simply as an example. I want you to understand what the option market is doing. I don't care that if you understand a trade. Like right now, all I'm doing was it's pricing a straddle. But that's neither here nor there. I don't care. Okay. What I want you to understand is the 200 call. A 200 call gives you the right to buy the stock at 200. Do you have to buy the stock? No. Do you want to buy the stock? No, not really. Why are you buying a 200 call? Maybe because you think the stock is going to go up. But then you have this 200 put, and the 200 put gives you the right to do what? It gives you the right to sell the stock At what price? 200. And that too is going to cost $3. Okay? These are what we call at the money options. Okay? And again, at, okay, the money options. You go, oh, what's the money? That's like the weirdest phrase. At the money. Okay? There's in the money, out of the money, at the money. What at the money simply means, the money is the stock price. So now you have this call trading for $3, $3, $3, and you have this put trading for $3, $3, $3. Did you know that if you added them up, it would be $6? Okay? $6. Because some people say you should buy a call and you should buy a put. That way, if the stock goes up, I'll make money. And if the stock goes down, I'll make money. Yeah, well, guess what? The stock has to move $6 just for you to be able to break even. I know there's a lot going on this slide. Okay? But what I want you to take away, and I'm going to blank it, and then I'm going to start again with it. Okay? What I want you to take away from this slide, all right, is if you go out, okay, and you purchase a 200 call, and you buy that for $3, and you simultaneously purchase a 200 put, and that's trading for $3. There's an implication in here. Okay? The implication is that the stock, all right, is being gauged to move $6 higher or $6 lower, not $3. You add these up. So the stock is going to have a range of about 206, right? Because the stock is trading right now at 200. Stock's going to have a range of 206, or the stock's going to have a range down, okay, to 194. And it's supposed to stay in that range 68% of the time. Time out! All of a sudden, I just threw 68% of the time in there. You're like, the little hamster getting stuck in the wheel. Don't panic. Okay? Don't panic. That's just one standard deviation. It's just basically, it's a normal movement. All right? So why, everybody always asks, why do you add the call to the put? Because if you add a call to a put, it's giving you the market's interpretation of how far this stock can move without any directional bias whatsoever. All right? Now we're going to have a little bit of fun and see if that actually works. That's the whole key to this, right? So if I tell you that the at-the-money options in here, if you were to purchase the at-the-money options, you need that stock to go up $6 or down $6. You would need that just to be able to break even, okay? Guess what? 68% chance, though, we're going to stay in this range. That's what, by the way, the 68% chance, that always blows everybody's mind. That just blows their mind, okay? Listen, all I want you to get is that there are options now. And the at-the-money options, the call plus the put, is what we term expected move. Now, I'm going to make your world a whole lot easier. You ready? You guys okay? Is everybody okay? Because this is the point in time, you're watching this later on and recording. You're like, I'm not okay. Okay? Well, I need to know if you're okay. Because, we have right now 700 people on. If you guys are okay, and then everybody ever that's going to watch this is going to be okay. Right? So expected move and probability. Expected move defines a one standard deviation, 68.3%. I can't stand these definitions. I just like to put them here for fun. Expected move is a probability of expiring inside a given range by a specified date, yada, yada, yada. You know what I put this there for? Engineers, okay? It's all for the engineers. All right. Listen, not every trading application has what we term expected move. You can use the at-the-money straddle as an alternative to expected move. Just bear with me. I'm going to show you this in a screenshot. Add the at-the-money call and the at-the-money put for any selected expiration cycle. Blah, 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 blah. If you don't know the terminology, you don't know what's going on. Now, let me show you what's going on. Here we go. All right. This is the first real trading screenshot that I'm showing you. Okay? This is today. This is today. This is Netflix. All right. Why am I using Netflix? Because Netflix is a big, scary beast from which there is no escape, right? It's a $331 behemoth. And we're looking some 17 days out. So somebody says to me, and just follow my mouse, somebody says to me, Don, how far do you think that Netflix can move in the next 17 days? And I go, oh, I know. It can move up or down about $30. They go, well, that's good. It's good to know. Because if you know that stock can move $30 higher or $30 lower, okay, There are so many trades you could build off that. There's risk management off that. Listen, I could go for an hour or two just about all the different ideas of what you could do with that $30 move. Now, you don't know, though, if that stock is going higher or if it's going lower. It doesn't tell you that inside of the expected move. All it tells you is, yes, it's going to go, baby. And if you don't have this little tool on your trading application, you don't even need it. You just add what? This, okay? And I want to say this. What's this? Here's the puts, here's the calls. Add the at the money. What's the at the money? It's the closest to the stock price. So the stock price is Netflix, right around 330. Add the call to the put. Dun, da, da, da. If you add the call to the put, it equals about $30. It's pretty close to the 30.43. I know. Some people get all upset about that. They're like, it's off. It's off by 53.5 cents. I'm like, oh, there's medication for that. Apparently you're not on it. No, it's almost like a rounding error in that case. So yeah, you can figure this out in any given underlying. Any underlying you want. All right, you guys want to do another one? Let's do another one, okay? Listen, expected move examples. Let us evaluate several short duration weekly expected moves. Let's make sure, okay, you now know, okay, what it is that we're looking for. This is an example, okay? I'm going to start with Apple. So this is Apple today. What am I looking for? Apple, first of all, and it's totally like a blanked out screen, right? Apple is a $300 product. The expected move is about $6 and change. But if it's about a $300 product, we just add these calls to these puts. Look, these are $3.30. These are like $3, yada, yada, yada. What does it equal? It's about $6, right? That's it. So what does it say? Okay. What this says, and I say this is like a little equation, right? Apple in the next 3 days. That's just 3 days. 3 days. Okay. This option expires January 10th. You're like, when is that? That's Friday. That's like this Friday. So Apple in the next 3 days is expected. It doesn't definitively mean that we're going to move that, but it's expected to move $6 higher or $6 lower, right? Onward and upward. Next, Tesla. Why did I bring up Tesla? Because Tesla is Mr. Toad's wild ride. There's Tesla. Okay, and I wanted you to see it's a $460 stock. In the next 3 days, the same as what? Apple, this thing can move up or down $15, right? And by the way, if you didn't have this tool, because you didn't have, by the way, this is a trading application called Thinkorswim. And this is what I worked on for the better part of almost 15 years. A lot of the tools on Thinkorswim, including an expected move, people say, where does stuff like that come from? It comes from geeks like myself that sit in rooms for far too long being isolated with software developers, all right, that get very strange sense of humor after a while. Anyway, you could use the at the money put versus the at the money call. Now, by the way, if there's any other stocks that you want me to pull up, let me know. Like I want to make sure that you guys get this. So let me know if there's another stock you want me to pull up, like any stock that you can think of. You know, this is why this is an interactive session. Ford, really? Okay, don't make me pull up Ford. All right, so that's not gonna be very exciting for anybody. I don't mind pulling up whatever you guys want. Just please, not Ford. Boeing. I take a lot of positions inside of Boeing. So close up in the next 3 days. Boeing is poised to move like a whopping $7. I guess the irony of that, though, it's like, you know, it's a $300 stock. It can move a lot more. I mean, the markets are really moving overnight. Okay. And somebody said Roku. I love it. Like, go through, like, figure this stuff out. Look at Roku. Roku is a $138 product that's poised to move like $7. That's crazy stuff, right? I mean, and again, if you didn't have this trading application, you can still figure this stuff out by looking at the option chain. The option chain is what I'm getting to, okay? It's telling you, somebody said Amazon, right? The option chain is telling you what the implied stock price movement is going to be. Now, of course, Amazon, come on, it's a $2,000 product. Well, After tomorrow, it might not be anywhere near 2,000, but if you're unaware, markets may move down a little bit this evening. It's been some rough news. Amazon's only poised to move about $30, and I think the irony of that is that's only double what Tesla is implied to move. We can go all night long on that one, right? So again, Tesla is going to move $15, and it's a $460 stock. Amazon's a almost $2,000 stock, and it's poised to move $30. So you get it, right? Tesla's really, really volatile. Listen, before we go any further, what you need to know is why expected move matters. Listen, expected move. This is not based on some line drawn on a chart. It's not a figment of somebody's imagination. Like it's not a figment of a trader's imagination. Expected move is based on billions of dollars at risk within a live market and produces astonishing results, because everybody is going to start asking me, does this stuff work? Does it work? Like if Apple says it's supposed to move $6, is it really going to move $6 68% of the time? Okay. And the answer is, oh yeah. Like the mathematics behind this are incredible, how tight and how efficient some of, this happens to be. And that's really what I'm going to hammer you on. But I just want to show you briefly for a second, just real briefly. We're going to go over to a product that some of you know. It's called Apple. Okay. And I just want to make a quick point. People go, how is this expected move of $6? Like, how is that really relevant? Like, how do you know it's probably going to move $6? Remember, the options in the chain, okay? It's the options, not Don, not me, dictating how far the stock is going to move, right? And you go, okay, so what? Maybe the options are going to lie. Really? Because Apple today, and today was a slow day in Apple, traded 500,000 contracts. Okay, we're talking hundreds of millions of dollars traded hands just today in these options. You know what $100 million says? It says we're going to move $6. What do you trust? Hundreds of millions of dollars? Okay, or a line on a chart? Get it? Okay. But this stuff works, okay, more than anything around earnings and earnings related announcements. Why? Because there is huge volume, huge option volume around earnings. Everybody trades around earnings. Okay. Here are some recent earnings related trade announcements whereby, the markets adhere directly to expected move. Now, listen, we're going to go into beyond just like, showing you like, oh, here's a move. All right. I went back to the previous earnings announcements. Here's one on IBM. Right? So IBM, and I'm going to highlight this stuff. So here, IBM was trading at $142. Now, this is October 16th, 2019. So why did I back up like 3 months? Why did I do that? I did it because that was the last major earnings announcements, right? I did it because it was an earnings announcement. And I wanted to show you, that this is just a screenshot of the expected move before the earnings announcement. Now, this is literally taken at the end of a trading day. It said that the IBM is supposed to move $6.74 when the earnings come out. Question is, did it do it? All right? You ready? There you go. Okay. So the three lines represent, and it's not some line on a chart. What I did for you, this is where IBM closed. All right. And I want to back up again for a second. Where did IBM close? And again, reference point, it closed at 142.11. It was supposed to move 670 higher or 670 lower, right? So what I did to help you grasp this concept right here, is the 142.11. This is $6.70 higher and $6, and 70 cents lower. All I wanted you to see is that when IBM earnings came out, like the earnings came out after the bell, the conference call, the stock dropped almost to the penny on the edge of what it was expected to do. That's it. That's all I wanted to show you on that particular example. By the way, we're going to do this a couple of different times. right? So this has nothing to do with like, there's no technicals involved, okay? There's no MACDs, there's no Fibonacci's, no Bollinger Bands. I personally drew these lines on the screen, and I drew them on the screen to dictate to you where, okay, that edge, this expected move happened to be. Let's do it again. Here's one in Goldman Sachs, and again, the same kind of time frame. I did one in Goldman Sachs. I thought this was interesting. So Goldman Sachs, not too exciting, right? It's a $205 product, okay? And this is a screenshot taken from October 14th. Now, it was supposed to move $7.38. Now, this screenshot again is before the earnings announcement, right? So let's actually see, how would this have fared? Okay, this one's interesting because I'll tell you exactly what occurred. This is where Goldman Sachs closed, right? Right around that 206 level. It literally tagged the lower edge of the expected move, okay? Stopped, hung out, and then rallied back up, okay? This is all tradable information. You just have to know how, okay, to ascertain it and how to actually execute upon it. I cannot stress to you enough. Goldman Sachs is supposed to move $7. Did it move $7.36? It moved literally, okay, 1 penny away from the edge of expected, then reverted back up. Now, again, bear with me as I go through this, okay? I go on and on and on. This is where, people are like, is this market manipulation? It has nothing to do with that. You can call it manipulation all you want. It just has to do with, in today's marketplace, there isn't much give and take. It's a very efficient, because there's algorithms trading this stuff, okay? And if billions of dollars trade Goldman Sachs before earnings and billions of dollars expect a $7 move, then by gosh, we move $7 because algorithms are going to drive us to the edge of that. Now, does this expected move knowledge help provide a tradable edge? You ain't seen nothing yet, okay? People like, all I'm trying to do is introduce you right now to a concept, okay? It's going to get a lot deeper in just a moment. Application of expected move. Our knowledge of expected move, it became apparent in the SPX. All right, so I do a lot of research. And again, when I say a lot of research, I sit here and we use big data and we do a tremendous amount of research. But our knowledge of all of this stuff became apparent inside of the SPX, which is the mother of all products, right? Many years back. However, the growth of algorithms and computerized trading has created this definitive expected edge in stocks as well. But we found that in stocks do not adhere to this nearly as much, okay, as the SPX, unless there's earnings announcements. Because earnings announcements, the stock adheres directly to it. Earnings announcements bring heavy trading volumes into the option markets. And those heavy trades create solid, expected moves. They create a tradable edge. Stocks adhere deeply to expected moves surrounding earnings announcements. That's what I'm going to drive home to you right now, because at this point, everybody's like, does this stuff really work? And I always say, the proof's in the pudding. Okay, let's look at what the expected move on a few stocks happened to be, like a day prior to earnings, and then see if the markets move as expected. So again, we're going to just go through example after example after example. I'm going to bring up some old ones, and then I'm going to bring up some new ones, and we're going to laugh, and we're going to cry. But here, listen, this is Apple, and I'm kind of giving you, if you will, this is like the full Monty. This is a screenshot. Again, this is one where I took the screenshot all the way back in April of 2019. But I thought it was so interesting on this one because it couldn't have been a cleaner, example of expected move. And I'll show you exactly why I'm going to use this for an example. Apple, before the earnings, was trading at $200, like on the button. Its expected move was $10. By the way, this is one that I traded it, so and I'll show you the trades here in a moment, but I traded this exact trade. So this thing was supposed to move to what? You tell me, okay? You tell me. So if Apple was sitting right smack, and this is why I'm using this older example, if it's sitting right smack at 200, it's supposed to move up $10, which would be what? Okay, to 210, or it's supposed to move down $10, which is 190. What did it do? Okay, now I'm going to show you, right? Right after the earnings came out, boom. By the way, here are the earnings. Here are the earnings. So right there is where we were before the earnings, okay? The stock overshot. And by the end of the day, came right back to 210 on the button. I just wanted to show that to you. Okay, so this is the close, which was 200 and change. Show it to you on a chart. The stock actually shot up, gapped up to 215, and actually backed off to 210 on the button. Why did it back off to 210? Algorithms. There was also, okay, over billions and billions of dollars traded on this particular earnings announcement. Look at the, and I left this up here, I say over billions. Listen, that's just, okay, the volume right before the earnings announcement. That didn't even include the open interest. It's billions and billions were traded on this. This is the contract size that traded right before the earnings announcement. It's staggering. That's just six strikes of options. Okay, think about how many billions of dollars traded hands to make this worth a $10 move. That's what you got to understand about this. That's why the thing moved $10. Next one, Snapchat. Okay, here's another one. And I traded it. I'm using Snap because it was right around a $15 product. It was supposed to move like $2. It's supposed to move $2, $2. So if it's supposed to move $2.11, okay, now you could say it's all right from $14.83 plus $2.11. It should move somewhere near like $17 and change, right? Okay, what did it actually move? And again, I'm giving you a before and after shot, so just so you guys see. Here's the before. That's on July 23rd. Okay. Here's the after, which is July 24th. The actual move, it moved to 1761. Okay. Literally a hair outside of the expected. A hair outside of the expected. Then we'll do another one. Here's Caterpillar. Caterpillar was a $138 product, right? And this is another one. Again, I traded all of these. That's why I'm displaying them to you. And then I'm going to show you much more recent trades. So here's one also on July 23rd. It was supposed to move $5.64. Now, is it going to move higher or lower? And you go, what's the answer to that? Is it going to move higher or lower? And all you have to say is, yes! So if we look at the net change on the day, we fast forward the day, okay, it's supposed to move $5.60. What did it actually move? Okay, $6.19. That's pretty close. It was supposed to move $5.65. Okay, by the end of the day, on the close, $6.19. You're like, that's not perfect. Yeah, it's pretty good. All right. So what we have here, right? Predictable ranges via earnings announcements. You get that part. Like, get it. Like, okay. The stock is probably going to move up or down by X amount or very, very close to it. Now we have to actually trade it. All right. If you get that we're going to move in predictable ranges and if the options market is actually driving us to the edge of those ranges, okay, how does one profit from these moves? Okay. Positioning yourself around expected moves. Let's just get down and dirty. How do you position yourself most effectively around these earnings expected moves without absorbing large amounts of risk? Okay. This is Enter the Butterfly. All right. All I'm going to do is explain, okay, in context of what you should be thinking with these trades. So I'll give you an Apple example. A-P-L. Apple, okay, it's expected move. Now, Apple, let's say, is trading at 200. Obviously, Apple's a $300 stock, but I'm using my example from earlier. Apple's trading at 200. Its expected move was plus or minus $10. Okay. All we do is we know that Apple's here. Okay. We are estimating based on expected move that stock can go to 210 or it can cruise down to 190. What we're going to do is we're going to lay what is termed a butterfly on top of it. A butterfly is a type of option spread. The option spread, okay, will explode in value should we hit anywhere near the 210 level or, okay, for example, the 190 level. Now, this can become very, very, okay, target specific. Now somebody says, well, why would I want to do this strategy? Whether you know this or not, how many people here know what a butterfly is, right? You're tuning in tonight. Do you know what a butterfly happens to be? All right. That's good. More caffeine later in the evening. It's good for me. Okay. That's why. So I don't want to go into context too much about the butterfly because I'll tell you what, we could teach to do a butterfly in a very, very short period of time. Tonight, it's more important that you understand the context of this. Here's the context of it. The context of you have this $200 stock. Now, you have a $200 stock. Do I own the stock? No. Do I want to own the stock? No. All I'm doing is saying in this case, I think there's a pretty good chance that stock can go to 210. Good. Okay. We're going to take, let's say, 80 cents. 80 cents. Now, you can go out there and you could buy an option trade for 80 cents. But you can't buy one share worth of an option trade. Options trade in contracts. Okay? And one contract is the equivalent to 100 shares. So this trade ain't going to cost you 80 cents. It's going to cost you $80. You could trade something like Apple for $80. And for your $80, okay, you're going to lay what is called a butterfly right on the 210 strike. For $80, you're going to lay a butterfly right directly on the 210 strike. And if that butterfly hits, it could be worth as much as, let's say, $5. That interest you? Okay. By the way, $80. Okay. $5. Oh, wait. Let me add that. And not a per share basis, put it to a contract basis. One butterfly can be worth $500. $80 can be worth $500. But I don't think you're ever going to make $500. But I'll tell you what happens if you could easily turn the $80, okay, into $200, or the $80, okay, into $300, okay? And you can do it with relatively high frequency. That's the key to this. And that's when people get so antsy. They're like, well, is the stock going to go up? Is the stock going to go down? Does it matter? Okay. We have this really high probability of it going up or down. Okay. And all we're doing is laying this trade on. And if we hit the edge right on it, the trade's going to explode in value. Again, the trade is going to explode in value. And the best part of this, the butterflies, people, they are dirt cheap. There are butterflies out there, okay, 26 cents. There's a butterfly I did on Snap for 11 cents. Most butterflies are anywhere from the 50 cent, okay, on up to about 80 cents range. That is most butterflies. You're going to see ones in a minute. I did for 26 cents, for 11 cents. You'll see one as high as maybe $1, okay? But that's the odd butterfly out. But if you're doing a butterfly for $1, you could probably make as much as $10 on it, all right? This is a strategy where it's a hit and miss, okay? Commissions these days, dirt cheap, negligible. You don't even have to worry about this stuff, okay? What you got to worry about is understanding the context of what we're trying to do. That you have this expected move and you know that that stock can move up or down $10 and you have to know exactly where to place that butterfly. You have to know exactly when to get that butterfly on and when to take it off. You could even use what's called good till canceled orders on here so that you don't have to sit here and monitor the trade to take it off. All right? This is the kind of stuff I'm telling you want to learn around earnings, because earnings, you don't know if a stock's going higher or lower around earnings, okay? All you know is it's going to move. Listen, this is why you want to use earnings butterflies. It is the highest rate of return surrounding earnings announcements, bar none. There's extremely low upfront cost in overall risk. You never, need to buy or sell the stock, and it provides a consistent earnings trade without having to continually monitor markets or the stock, right? And I'm telling you, if you're going to trade earnings, people, you need this in your life, okay? Earnings butterfly spreads give you the power to trade massive stocks around earnings with just pennies at risk. When I say pennies at risk, here's the first example. I'm going to give you examples. And by the way, every example that I am giving you this evening, okay, are based on all live trades that I did. All right. And I'll start off and I'm going to explain some of these examples. This is a live earnings fly trade examples. Now, I'm starting off with one of the trades that I showed you a little bit earlier. And this is when I said, like, hey, there's a reason that I mentioned Snapchat, right? This is a snap earnings fly. I entered into it July 23rd. I exited it on July 25th. I paid an 11-cent debit. I closed it, okay, for a 30-cent credit. This is not, absolutely killing it. But for every $11, so one contract would have cost me $11. For every $11 I invested, I got back 30. It's 100, okay, and 73% return. Now, I stop right there. Time out! Maybe you don't want like $11 at risk, okay? I don't know. Maybe you want a little amplification of that one. You don't have to do $11. That's one contract. You could have gone out and done 10 contracts. 10 contracts, $110 at risk to be able to make what? $300. And commissions, I'll tell you what, when I did this in July, commissions weren't that good. Commissions are really good right now. Okay. How's close to zero for you in terms of commissions? But I threw up the Snapchat trade just to show you, this isn't exactly like heroes work. $11. There's anybody and everybody can do this, right? If you have an IRA, you could do this in your IRA. Plain and simple. You could do it in an IRA now, right? Tax deferred. If you want to do it in a regular taxable account, fine. You do. There's only one rule here. You have to have more. Okay. You got to have more than $2,000 in the initial account to be able to place earnings butterfly trades. All right. You guys ready to move on? Everybody understand this? Because now I'm going to get to some serious examples. Oh, the other question that everybody always asks me, they're like, how do I know they're real? Here, you want to see how real this is? This is Think or Swim. This is my trading account. Okay. Any questions here? If you go to monitor tab, these are all the positions I currently had. Okay. This is my P&L for today. So kind of a mediocre day. I'm up $2,000. By the way, if the marketplace were to open right now, it would be a good day for Don. I've got a lot of bearish positions on. It'd be a good day. So these are all my current positions, but this is my account statement. All right. And I'm taking you 120 days back. I'm just going to take you 120 days back. Listen, I trade. People always say, does this guy trade? Right there. I have 495 fills in the last 120 days. And just for argument's sake, that ain't my only account, people. Okay. I trade. So I have 495 fills, okay, in this one account, in the last 120 days. You don't have to trade that much. I trade. And I trade in front of people all day long. Now, if I scroll down, all of these are butterflies that I have placed. All of them are butterflies around earnings. All I did in this particular circumstance, and I'm just scrolling you through, okay, the green are my buys, the red are my sells. Okay, all I did was I broke the trade out into this particular slide deck, the open and the close, to make it a little easier to interpret. All right, by the way, what our members are saying, Don, of course, is the driving force, a wealth of knowledge and information. So glad he's doing what he's doing. He's adding a lot to the world of online trading education. The class today, Unexpected Move, was worth its weight in gold. Please tell him I said so. All the best to you in your position over there. Best, John G. All right, another trade. Microsoft. Now, I told you, I showed you a couple of older trades over here. This is a little bit more recent. This is the last earnings announcement that we're now in. This is a Microsoft earnings fly. I opened it on October 23rd, closed it on the 24th. Opening debit was 47 cents. Closing credit was $1. Okay. Every $47 I invested, I got back 100. It was 112% return. Next. Okay. IBM's earnings fly. Listen, I started with an IBM example. It's probably prudent that I actually show you the real trade. So October 16th, okay, exactly 7:30 in the morning, okay, and then this is the exit of the trade. So October 17th, I paid 29 cents for this butterfly. 29 cents! That's a big boy butterfly for 29 cents. Closed it for a 94-cent credit. Every $29 I invested, I got back 94. Remember, you don't have to do this, okay, for $29. You could do $290 to be able to make 940. It's a 224% return. All right, you guys ready to move on? Because now we're really rolling, okay? Next, CSX. What's CSX? Trains, planes, and automobiles, people. CSX opened on October 16th, closed on the 17th. These are all like one-day trades. Get it? One-day trades. Opened it for 37-cent debit, closed it for an 83-cent credit. All right, every $37 I invested, I got back 83. It's 124% return. All right, next, okay, Visa earnings fly. All right, Visa earnings fly. This was done on the October 24th, closed on the 25th. Every $36 I invested, I got back 105. It's 191% return. What I want you guys to get, because somebody at this point is probably thinking to themselves, do you have any losing trades? Yes, of course I have losing trades. In fact, I'll bring them up. Okay, you go, where are the losing trades? Look, I did one on Starbucks. There's no closing trade for Starbucks. There's no closing trade for Starbucks. See? There's a Starbucks trade. I paid 26 cents for it. You know what happened to it? It expired. Ooh, worthless. Okay, it expired worthless. Well, but, you know, you don't have to be right all that often when you're making 190% return, do you? Okay, you only have to hit a handful of these to make it worth your while. So you lose, home run. You lose, home run. Okay? I'm going to show you almost every single trade that I did last earnings period too. Next one, Intel. By the way, if you didn't catch that, this was the Visa one, $36 to $105. Right? Intel. This is an Intel fly. Intel. By the way, you'll see they're all around the same trade date too. This one I opened on the 24th, closed it on the 25th. Okay? 26-cent debit. Okay? What? 71 cents. Every $26 I invested, I got back 71. It's 173% return. Not bad. Again, you don't have to hit them all, do you? Okay? Next. Thanks for last night's video on Apple's earnings. Okay? I set up the same trade, and it looks like max profit tomorrow. Just wanted to send you a big thank you from Dave. Onward and upward. Mo. Okay? Philip Morris, Altria Group. It doesn't make a difference. All right, so here we are again. These are all my October trades. October 30th, out on the 31st, paid 25 cents, got out for 66 cents. It's 164% return. Again, you don't have to have a lot of 164% returns. You don't have to do one contract. You could do done 10, you could do done 20, you could do 100 contracts. That's up to you. I don't suggest that many, okay? Because again, you have to go in here and you think about nickels and dimes. $25 gets you back 66. So what? You do 10 contracts, $250 gets you back $660. Next one. Now we're getting a little bit more serious. Facebook. Dun, dun, dun. Every $65 I invested, I got back 160. It's 146% return. We could just go and go and go and go. Example after example after example. Bear with me here for a second. Listen, there's a lot to read in here. Just want to thank you, okay, for month 2, welcome and express my admiration and appreciation for all, okay, you and the TheoTrade team are doing. So October, retired from Banner Health, okay, purchased InvestTools education package for $25,000. Due to circumstances, I was never able, okay, to get my investing off the ground, partly because of fear of loss. Anyway, if you read through here, all right, it comes down to so much. Thank you so much for the live chat room, all the information available, okay, in a professional and affordable manner, and for your excellent support. TheoTrade, okay, is absolutely the best. It's actually Ron in Glendale, Arizona. Right. By the way, we start early in the morning is also what it says in here. This is an individual that's done really well, okay, with us. By the way, as I said, I'll expose every single trade. Every trade that I just took you through was done live, was done in front, okay, of TheoTrade clients. Here's all of the trades just from that time frame, okay? These are those like October trades, okay? The in, the out, get on with it, people. Those are all the trades that I did, all right, just around the last earnings announcements just handfuls of trades, it's fine. Okay? But I just wanted to show you where they're actually coming from. This is really, really hands-off stuff. Listen, no time, no problem. Each and every trade shown today was displayed live at TheoTrade. By the way, people ask hey, why, when you look at my trades, okay, why do you do a lot of the trades? Some of these are done, right? Right at 7:30 in the morning. Why are you doing so many trades at 7:30 in the morning? Okay, that's because that's when I'm live. That's typically when I'm on. That's my time, right? The trade results, okay, we're showing are perfect though for part-timers. It's earnings. You put them on, you take it off, you get on with your life, right? The earnings fly is hands off. It even uses set and forget order types. Even a fraction of your time is enough to see some pretty strong results. Okay, we want this to be hands off. Now, the characteristics of the earnings fly, okay, the attributes of the earnings fly spreads are undeniable. You never have to buy the stock. You define your risk, and it's minimal risk at that, right? Risk is limited to precisely whatever comfort level. You want to do one contract and have what? Look down below, okay? In this spread down below over here, we have what? 26-cent debit. You do one contract, you have $26 of risk, okay? You need not use a stop order. Who needs a stop order? You have $26 at risk. There's no need for a stop order. It's ridiculous, okay? Profitability can be extreme percentage returns, right? It's the perfect spread to reduce risk of a stock portfolio because you don't have to go out and buy any more stock, but it's an excellent tool, okay? You want to build returns. You want to grow an account, especially a smaller account. This is the strategy that you want to embark upon, especially around earnings. Now, people get a little intimidated by the trade. You got to build it, right? Building the earnings fly. So first and foremost, you do not let options intimidate you. Okay? Don't let this stuff intimidate you. The butterfly spread below is being done for a 26-cent debit. It's $26. But you got to look at this entire use of options. It's like stepping in and using just a massive power saw. If you use a power saw correctly, it's going to be the cleanest, the fastest, the safest way to get where you want to go. Options are the exact same thing. Use options correctly. It's going to be the quickest, the fastest, the safest way that you're going to get where you want to go with your account. Use them incorrectly, you're going to cut off a couple of fingers. All of the right questions are coming in right this second, okay? People are like, do you only pick stocks with low vol? When do I get into this? When do I get out of it? We're going to get to all of that, right? But before I get there, you got to know you can do earnings flies, right? Maybe you don't know much about options. Maybe you have limited experience with options. Don't let the options portion of this intimidate you, okay? You need these strategies for the foreseeable market future. We can show you how, and we can show you exactly when to place earnings fly spreads in a matter of a few hours. And what we do here at TheoTrade, we create detailed recipes for each trading strategy, okay? Including, of course, earnings fly spreads. And the way to think about detailed recipes, what is it? I mean, listen, you wouldn't bake a cake without a recipe. And people trade with one, though. Why would you? Okay? A recipe is literally, it's a checklist. It's step by step. Okay? We take you through incrementally and say, step 1, these are the stocks you want to do this on. Step 2, when do I put this on? I'm going to tell you right now. Put this on at the wrong time, trade will not work. It just simply won't work. Can't do it on a Monday. Can't do it on a Tuesday. It will not work if you put these trades on a Monday or Tuesday. Yes, they are literally day-to-day specific. That's why you need a recipe. In fact, you want to see? This is what you need to know to successfully enter and, more importantly, exit earnings fly spreads. What makes a viable earnings fly candidate? Like, what stock should I do this on? How far before earnings, right? What volatility should I seek out? I saw that question actually pop in over here, okay? What options expiration do I select? I mean, do I do the short as possible? I don't know, okay? What should be the delta of the option that I buy? What expected move do I use? Do I use the market maker move? Do I use the expected move? And how do I determine positioning this butterfly? How do I build the trade? What's the right amount of risk for me? Like, you have to position size this correctly, because position size it incorrectly, it's all for nothing. Let me show you what we do here at TheoTrade. TheoTrade creates recipes in trading. Whether you know this or not, or whether you've traded or not, you're going to find this out over time. In trading, it's all about answering the what ifs. What might be a good stock or ETF candidate for an earnings fly? What's the correct options expiration cycle to buy my earnings fly? How much capital do I commit to each fly? What strike price options do I buy and sell, and how many? In growing a small account, what should be my allocation? We have those answers. That's what we do here at TheoTrade. We build recipes with definitive criteria. We build checklists for each strategy and each unique variable that you're going to encounter. Right? This is like walking into a cockpit of an aircraft, and you go there, and if you've ever been to the cockpit of an aircraft, the first thing the pilot does is actually pulls out a book with a checklist, like a physical checklist, and says, step 1, where are the keys to this thing? Step 2, is this a Boeing 737 MAX? No, in all seriousness, you don't have a checklist. It's all for nothing. There are a lot of variables that come into play. Okay? There's a lot of variables you're going to encounter. Like what? Well, that's what we do here. We answer all those questions. We give it the right probability for the trade. How many option contracts do you trade for the account size? When do you close this fly? Okay, what if the stock sells off big? What's the correct return for the strategy? If you noticed, the returns for the strategy were very specific. And a lot of people don't pick up on some of the details. When I went through all the different trades, did you pick up on the little details? The details of, hey, what do I do with this? What do I do with that? All right, there's a lot of little details, and those details are important. What if the stock rallies massively? Can I fix a losing trade? It's the how, it's the when, it's the why, it's at what price. It's just the beginning of the many variables that you will face while trading an earnings fly. You got to know what you're doing in here, all right? Listen, you can read what a butterfly spread is. And you know what? A lot of people attending this evening, you might even know how to build a spread. Okay? Maybe some of you guys joining us this evening, you're like, I know what a butterfly is. I know what it is. Okay? But you don't have the recipe for success, which includes 20 plus years of trading experience, access to client order flow for over 15 years. Where do you think this criteria comes from? We don't pull like the rabbit out of the hat, right? We built this criteria based on having viewed and studied millions of trading accounts, ran education for over 15 years, okay? At TD Ameritrade, which had at the time the largest options order flow in the entire industry. That's where this criteria comes from. And criteria, that's your recipe for success. The following strategy and corresponding criteria requires the utmost attention to detail. This strategy, okay, people, we spent years fine-tuning this trade setup and criteria. Okay, when we approach the section on criteria, you got to follow the steps to build the trade. Okay, this is a course specifically on trading butterflies in and around earnings announcements. It's a guide to maximum edge trading earnings. I am the trade instructor, Don Kaufman. Happens to be a 4-hour course, and it is available immediately with 24/7 access. This is a course, because of the complexity of it, we put this together, we edited it, it's ready to go. The class has an entire slide deck with it. That slide deck, it includes the checklist. It's the entry and exit criteria. That is available now, immediately for download. The course itself is also archived, okay, or downloadable. And you can actually download the course for TheoTrade Mobile. We have iOS and Android. The course tonight, it's $497 to attend. Okay, well worth it, because I'm going to tell you right now, people are going to blow more than $500 in what? In 2 different butterflies trying to figure out, do I put it on here? Do I put it on there? Now, hang with me for a second, because I'm going to show you, again, what this course fully entails. Again, it's the guide to maximum edge trading earnings. It's earnings butterfly course. I call them E-flies. The guide to maximum edge trading earnings, a couple of key points. This is the curriculum for the course itself. First, we're going to teach you how to use earnings butterflies, okay, like seasoned traders to generate consistent weekly returns, okay, during earnings season. Now, there's a lot of other strategies that you can use outside of earnings season, and you can actually use this logic in the index products, for which we also have a course. I'll show you that momentarily. Number two, right, how you can actually predict, all right, with a high probability where the stock price is going to go, okay, after the earnings announcements. Number three, how you can trade even the most wild earnings announcements. I mean, we're talking Tesla, we're talking Amazon, and Amazon's not even that wild. It's just huge, okay, with a high probability of accuracy. Number four, earnings butterflies are great for small accounts, okay, who want to take minimum risk and generate high weekly returns. An account of $2,000. How to use defined risk reward strategies so you never have to lose sleep over your positions again. Like, earlier I was talking about an Intel trade. What do we have for risk on Intel? What? It's like $26. Who cares? Yeah, went against me. Okay. How to build your own earnings butterflies with detailed step-by-step entry and exit criteria. Which stocks make the best candidates for earnings butterflies? Which strikes, expiration, okay, give the highest probability of success? When to open, when to close earnings flies. Okay. Why trading earnings announcements does not mean that you have to be glued to your screen. All of this can be done. Minimal options experience. We ramp you up to do this. You can also do it in retirement accounts. You got to have $2,000. That's it. Follow the recipe to build a trade. That's what's important about this class. Now, moving on. Listen, people come out to all kinds of stuff. I'm sure you guys have listened, to different seminars about trading. A lot of you, I kind of feel, have always been through like the gauntlet, right? You want a bonus. Listen, TheoTrade, okay, we go beyond one class or one indicator, all right? I get it. People want everything to trade and invest. They want it at one place, and they want it at one price, and that's precisely what we do here at TheoTrade. Now, bear with me for a couple of moments because it's going to take me a couple of seconds to get through, okay, what we're going to give you tonight as a bonus. As I said, going through a course, and this course is it's a full-blown course for 4 hours. But I don't want you to go through a course and then just be like sent out to the wolves. Go ahead, go trade them yourself, do it, go by yourself. It doesn't work that way. Or you take a course and then somebody says, hey, you have to buy this indicator for the course to work. It doesn't work that way. All right. What we do here at TheoTrade, we give you everything at one place, one price. Okay. And we trade with you. Bonus number one, we give you access to over 87 trading classes. So I'm going to make this clear. This is all in addition, okay, to the earnings butterfly course. So the maximum edge trading earnings course, this is in addition to it. We're giving you this as a bonus. We're going to give you every single course that we've ever done here at TheoTrade. All of them are available immediately. They're on demand and on TheoTrade mobile. We will give you, when I say every course, I mean every course. It's the guide to maximum edge trading earnings. We'll give you the in-out spreads course, okay, how to collect income being short, the risk twist class, okay, the infinity class, selling high probabilities, iron condor, selling premium and minimizing your risk, survive and thrive in extreme volatility. There's a day trading class in NASDAQ futures, covered calls, essential skills, top 10 for small accounts, pairs trading. Listen, I'm giving you a quick glimpse. There's 87 courses in here. Immediately, tonight, we'll give you access to over $9,000 in classes alone. I'm going to tell you right now, they're not all my classes, and I want you guys to understand that this is not, like TheoTrade is not it's not like a one-man band, if you will, okay? Here's the instructors at TheoTrade. These are the instructors. Jeff Bierman. By the way, Jeff Bierman worked with me at TD Ameritrade. If you've ever been on Thinkorswim, Jeff is directly responsible for over half of the studies on the Thinkorswim charts. He was actually the former chief technician for TD Ameritrade. Next, Matt Williamson. It's a market neutral trader and premium selling option strategist. By the way, I also didn't give you this. Jeff Bierman, he's also a professor of finance at Loyola. You can see him there for $42,000 a year, or you can get Jeff Bierman here at TheoTrade. Okay, and you get all of his courses. So Matt, he's our premium selling strategist. Corey Rosenblum, that's our senior strategist and resident swing trader. Corey also produces several reports a week called Corey's Corner. You'll love it. Brandon Chapman, CMT. Brandon also worked with us at TD Ameritrade. Brandon was actually responsible, okay, for writing a course that used to cost $25,000 for an 18-month long course. But guess what? We don't do it anymore for $25,000. Okay. And the courses that we do now absolutely smoke. Okay. What he used to do years ago at TD Ameritrade. Steve Slim Miller's 43-year veteran stock options and futures trader. Tony, last but definitely not least, Rago. It's our NASDAQ futures. He's our intraday strategist. Okay. Courses have been put together by 7 of us. By the way, this is the 6 individuals plus myself. There are 7 full-time instructors here at TheoTrade. So your first bonus, again, you get access to every class these individuals and myself have ever done here at TheoTrade. Bonus number 2, we give you an all access TheoTrade VIP membership pass. It's totally free. Okay. It gives you 3 months unlimited access to TheoStream. Time out. You go to the course, check it out in the next couple of days. Okay. You can trade with us live for the next 3 months. We broadcast for 6 hours a day. Tomorrow, it'll actually be 7 hours because we do a little tidbit in the afternoon tomorrow, as we call it happy hour on Wednesdays. All of our traders provide real trade ideas and real-time market insights and analysis. Okay. We email out, okay, trades, well, right now, including in-out spreads. We'll also do, of course, earnings, butterflies, duration trades. There are 5 distinct trading portfolios. By the way, emailing trades ain't our thing. What we do now is we're texting and doing push notifications. I just figured I'd throw that out there to you. We also drop trades constantly inside of our chat room, which I'll show you here momentarily. We have daily coaching sessions with timely topics in stocks, options, and futures. And, okay, we provide you support. Our instructors, this is probably one of the most important things on here. Yeah, you got a live trading room. Yeah, you got 3 months access to this. But the instructors will answer your trading questions via email. Nobody does that. Okay. It's access to $997 plus of support, trades, and insight. That's part of TheoTrade. I'm not done. Okay. We also give you access to 59 proprietary indicators and scans. We turned around earlier and we said, we're going to give you an indicator tonight. We're going to give you the earnings expected move indicator. I'm going to show you precisely where that is in about 2 minutes. Enroll for TheoTrade tonight. We give you auto expected move. We give you gravity points, RSI, Laguerre, Quantix, NQ levels, next generation squeeze indicator. This is just a handful of them. Okay. All of our watch list. There is no sacred cow at TheoTrade. None. There's no sacred cow here. It's access to over $1,800 in indicators and scans. What we really do, okay? TheoTrade includes everything you need to invest and trade. We will give you classes, 87 of them. We will give you coaching sessions, which is daily, okay? We give you, email access to the instructors. You can literally email me. After enrolling tonight, you can email me and say, Don, what do you think of this trade? I'm going to tell you right now, okay? I'm going to give it to you as straight as possible. If you send me a trade and I think it's garbage, I'm going to tell you, listen, I wouldn't do this. I wouldn't do it with my money. I wouldn't do it with your money. If I just saved you from doing a trade, forget about making money for a second. If I just saved you from one bad trade, you realize, okay, the cost of that, okay, it's what? It's invaluable. But then we also give you a live trading room and live trades. All of those earnings flies that I showed you, I did all those live. Okay, I give you live trades. I get in, I get out, we get on with our life. Indicators and scans, we give you mobile access 24/7. It's everything that you need to succeed. And it's for 3 months. What we really built here at TheoTrade, it's the Netflix for traders. That's what we built. Every genre of trading, whether it's day trading, maybe swing trading, maybe you want to sell options premium. Okay, you need a little bit about the psychology of trading. We do it all. Okay, We do it all. We do it better than anyone else on the street, and we do it for one price. Sign up tonight. Total Theo. It's $297 for 3 months. Before I go any further, because I'm going to recap everything in here. Before I go any further, I'm going to tell you guys right now. All right? Right now in here. Okay? Be aware. This is not a membership. You just sign up for 3 months for $297. Everybody always asks that. What's going to happen after 3 months? If you love us, you can sign up for another 3 months. For how much? $297. If you love us after that, is the price going to go up? No. How about we do it for $297? Okay? This is everything that's included tonight at $297. It's a guide to maximum edge trading earnings course. Okay? But it includes 3 months access. Okay? To Total Theo Unlimited Streaming. Access to 87 classes, okay, all available immediately on demand. This is the first time we've mentioned this. Do you know that we're going to have new monthly classes? There's new monthly classes. Every month we've got classes. We have a live trading chat room. Traders provide real trade ideas, real-time market insights. You will see me execute trades tomorrow morning. Oh, there will be trades tomorrow morning. Indicators, 59 proprietary indicators and scans, emailed trade ideas. We actually text them out. Daily coaching sessions with timely topics, stocks, options, and futures. And I think most importantly, we'll answer your emails. We will answer your emails, okay? And we get hundreds of emails a day. Go now to TheoTrade.com/edge. That's Echo, Dog, Golf, Echo. TheoTrade.com/edge. I'm not done, okay? Kind of ice the cake over here. We're going to actually make it a riskless trade for you. Completely riskless tonight. Listen, everything you need to start trading, okay? If you're an absolute novice, don't worry about it. When I say if you're an absolute novice, don't worry about it, okay? I mean it. We have a start here menu, okay? You're now looking at TheoTrade. This is TheoTrade. Start here. Maybe you know nothing at all about this business. Start here. There's a menu. Start here. What do you do? Options 101, 201, okay? Options 301. We'll take you through from absolute novice to the extreme. Now, I'm going to bring that up again in a minute, okay? But tonight, we're going to give you a money-back guarantee. Listen, trade with us over the next 3 months. If you're not satisfied, email support@theotrade.com. Again, just support@theotrade.com. You must provide us the details of your trades, and you receive a full refund. We'll give you the $297 back. Listen, $297. It's not gonna end us. It's not gonna end you. There are some money back guarantee stipulations. Here are the stipulations, right? Pay attention. 3 months, you got to do 10 trades, okay, using earnings edge butterflies criteria in the next 3 months. But here's the fun part of that. I am going to do more than 10 trades in the next 3 months. Earnings is coming. Why do you think we're doing this tonight? Earnings is kicking off. The financials, yeah, they're going to kick off. When? Next week. We're going to do more than 10 trades in the next 2 weeks. So you have to do 10 trades, okay, in the next 3 months. The initial count value has to exceed $2,000. You must follow our criteria. You can't make up your own stuff. Provide real account statements of the trades, please. This ain't paper trading, people. That's it. We give you a completely riskless trade. And by the way, there's no other stipulations on there. I'm telling you right now, if you don't like us after 3 months, okay, or during the 3 months, and you've done 10 trades and you want your $297 back, good, go for it. You're done. Okay, we're fine. Because I'm going to tell you right now, you are not going to be disappointed. What we do, okay, is beyond any other site at any price, period. Listen, get into TheoTrade now. We work with you directly, okay? There are only 30 spots on the TheoTrade riskless trade deal, okay? We do 30 spots for the riskless deal, and that's the first 30 people to enroll now. Why? Because we have to answer emails. We have to actually do trade, okay, reconciliation, meaning that, as I mentioned a moment ago, I will go through each and every one of your trades. I don't care how many people send me emails, okay? But apparently it ties up a tremendous amount of time. So we give you 30 spots on the riskless deal. That is the first 30 people to enroll right here, right now, or on the riskless deal. You can get your $297 back. It's a matter of trade size. We trade live. Okay. We also provide you unlimited email mentoring, which for the most part, there are people, they'll send us 4 or 5 emails a day. It's one of the reasons, again, we have 30 spots open. Okay. Now send us your trades. We'll give you feedback on them. And the $297 offer has never been available before, okay, with this riskless trade deal. Listen, I'm going to give you the web address here momentarily again to go to what our members are saying. By the way, you guys are rocking it. Very impressed. It's really refreshing to have you guys putting this together and sharing your knowledge and not upselling everything and turning and burning your customer base. You've got a customer for life in me because of this approach. And I'm sure I'm not the only one. That's from David. Okay. Here's another one. This is actually taken from Facebook. I'm very impressed with TheoTrade. I've studied, okay, under stock coaches, various strategy intellects and different trading plans. I have not come across anything as good as what I'm seeing here. The people at TheoTrade are very helpful and extremely knowledgeable. And I'm looking forward, okay, to this association for years to come. All right. Don is the most knowledgeable person I've ever heard. My 50 years of stock investing, and I've listened to many. His knowledge of how the markets work is like sitting next to a finance PhD. Highly recommend learning from what this man has to say. That's actually Matthew W. Again, another one from Facebook. Listen, just to recap and where you should go. This is access tonight, today, $297. Again, the first bonus gives you 3-month all access pass. We do live trading. We do 6 hours per day in the chat room. I'm going to show you the chat room here momentarily. Okay. We shoot out trade ideas. There's trading indicators and scans. Okay. Daily coaching sessions. We have email support for you. The second bonus over here, we give you access to 87 classes. There's day trading, swing trading, technical trading, beginners options trading, advanced options. Okay. New monthly classes. Again, go to this web address right now, theotrade.com/edge. I'm actually going to pop this up because follow me to this link for the earnings expected move indicator. Again, it's theotrade.com/ it's echo, okay? Dog, golf, echo. So it's theotrade.com/edge. And I'm actually going to pull up the page right now because I want to show you a little bit about TheoTrade. Excuse me. This is TheoTrade. When I say this is TheoTrade, this is what the chat room looks like. So if you go in, here's our chat room. Obviously, we're off air right now. People, they're talking in there right now. There's hundreds of people in here this evening. And the reason there's hundreds of people in here this evening is the markets are moving tonight. Okay. And they're moving big. Speaking of the markets are moving big. Okay. Do you realize just the sell-off this evening? All right, just a little bit of a sell-off this evening. And the markets are moving big because there's geopolitical risk. The sell-off this evening, okay, I bet you this cost most of you more than $297 and a tremendous number of courses that are available here at TheoTrade. I'm going to show you, okay, here's the class archive. Huge number of these courses are based on hedging strategies. You know what this is? This is how not to lose your proverbial behind in the markets, surviving the extreme volatility. Okay. The next big short, risk twist spreads, beginner's guide to hedging and capital allocation, the reducing risk and maximizing returns, the atomic hedge strategy. I just wanted to show you that this is what the class archive looks like. You want to learn about futures, you want to learn about stock, you want to learn about options, technical analysis, day trading. Look, technicals, this I said, this is Jeff Bierman's kind of like mantra. Look how much is in here just under technicals. You have access, okay, today, tonight, to all of these classes. Before I go any further, I'll come back to that in a second. This is the web page you're supposed to follow me to right now, and I'm going to give you that indicator. It's theotrade.com/edge. It's the guide to maximum edge trading earnings course. Everything I talked about, though, is $297. To enroll now, just click right here, add to cart. Click add to cart. A menu will pull up for add to cart. Your billing information. Again, it's $297. The reason I'm pulling this up is I want to reiterate one very important notion. This is not a membership. Because everybody's like, how often is it going to charge me $297? We did away with membership. We call you a member, but it's not a membership. right? The thing is, after 3 months, like, we'll love you, but you don't have to stay. It's okay. We can part on good ways. But we're so sure that people are going to love what we're doing. That's why we do it for $297, right? And again, it's a phenomenal relationship that we have with our clientele, of which we have right now just about 4,000 TheoTrade clientele. Okay. In the chat room every day, there's well over now 2,000 individuals in that chat room on a day-to-day basis. One of the reasons we have 7 full-time instructors to be able to answer emails for those individuals. So again, click add to cart. Now, the earnings indicator, if you scroll down to the bottom of this, right down here, okay, that's the earnings expected move indicator for Thinkorswim. And you can actually download that indicator right down there on the bottom of the page. By the way, support at TheoTrade.com if you have questions. I am going to momentarily answer a ton of your questions. Now, as you guys are enrolling tonight, if you have continued questions, fire them in. I'm going to be here for a few more minutes. Fire them in. Again, it's TheoTrade.com/edge. As I said, I wanted to show you a little bit about TheoTrade. This is actually where we broadcast. Down here's a chat room. This is actually where you can actually talk to clients. Okay, how's everyone doing tonight? All right, apparently I can't type. So this is live. This is now. We'll see if some of our clientele are still around in there. So that's the member home. This is actually where we go in here and we actually broadcast. Moving on. Okay. Here's our option strategy classes, option newbie classes. This is the class archive. We also have a coaching archive, but I'll give you an idea of what kind of option strategy classes we offer. All right. Sell premium, small account options trading workshop, Butterfly's guide to weekly returns. Okay. The next big short, option Greeks, strategy week, you name it. We've got it. Start here. This is for absolute newbies. Okay. So for absolute newbies, you need to go through here. In fact, I'm going to reiterate this to everybody. Everybody should go through here because what we start doing in 301, okay, then we get to order execution. You want to learn, okay, how your order is really run through trading applications. You're going to want to listen to this. It'll actually shock you how orders really work, how order flow works. Okay, that's kind of my mantra in here. All right, moving on. Then we have member home. All right, they're here to actually answer live chats. This is a searchable archive. Any topic you can think of, any topic. You could type in, for instance, okay, MACD. Just type in MACD. What comes up? You want to know anything about MACD? Okay, you can actually search MACD indicators, coaching sessions. Okay, MACD, coaching session, MACD, fine-tuning your application to MACD, coaching session. Okay, underestimating extremes, MACD, pain versus gain trade. It just goes on and on and on and on. All of these are specific to the MACD. You name a topic, a title, we've got it, people. That's what we do here at TheoTrade. Now, as I said, I'm going to go on to answer a couple of questions for some of our clientele this evening. And let me get to a few of those right now because I can see them pouring in. So stay with me here. All right. By the way, members, okay, the archives of TheoTrade are a godsend. Okay. You can stop the tapes, reverse the tape, make notes, and use the information. TheoTrade topics and content are right on target, really getting a lot out of the classes. My trading results are improving thanks to TheoTrade. Keep up the great work, Don. All right, here's a couple of the questions. Then I am going to jump into some of your very specific questions from the chat room, so bear with me. Again, if you need the web address, it's theotrade.com/edge. I will leave it up there. Listen, a couple of the major questions that come up that we try to kind of front run you on here a little bit. What do you need for this? What do you need to get started here? You need a laptop and an internet connection. Because we at TheoTrade have everything you need to get started from absolute novice to some of the most extreme traders. Second one over here. Everybody, again, this is not a membership. We will not auto-renew or bill you again. Okay? In fact, at the end of your 3 months, we send an email. Do you like us? Do you love us? We actually send you incremental emails after a month, after 2 months, just to make sure you're absorbing the stuff. Okay, that's okay. What we do here at TheoTrade is support the clientele. Again, it's not a membership. Number 3, TheoTrade. We archive everything, and we understand that not everyone can watch live trading throughout each trading session. I get it. So we archive it. And when you replay it, you can actually play it back at 2 or 3 times the speed. That's fine. You can even play it back on our mobile application. Number 4, we will provide you access to TheoTrade Mobile. You can download the archives, so you can be at 30,000 feet on an aircraft and you can kind of view them at your leisure. That works just like Netflix, right? Where you can actually download it on the TheoTrade Mobile as long as you're, part of TheoTrade. You can check out the archives. Number 5, you can email us anytime. And you can receive a response within 24 hours, including trade-related questions. Okay? We trade. We understand trading-related questions. All right? Number 6, you will gain access to every course TheoTrade has done in the previous 4 years. It includes classes, coaching, live trading sessions. All archives are searchable. Name a trading topic, and we have an archive on it. Number 7, all of these trades can be done inside an IRA or retirement account with as little as $2,000, okay, in the account. Now, I say, somebody actually asked the question, I saw it in here, says, why does he say $2,000? That is actually a FINRA rule. You got to have $2,000 to do spreads, specifically butterfly spreads in the account. All right, that's not my rule, it's their rule. Number 8, at TheoTrade, we can help you get approved for options trading at major brokerages. All right. Obviously, I have a relationship with several of the major brokerages out there. We actually have relationships with E-Trade. It's one of the biggest, right? We have a relationship with TD Ameritrade, which is soon to be Charles Schwab. And we have a relationship with Tastyworks. We can get you approved for options, okay? Whatever brokerage firm you want, we work with them. Number 9, remember, 30 riskless trade spots are available this evening. I throw that out there because, there's only so many emails we could possibly answer, so many trades that we can reconcile. We want, to give you guys the opportunity, check out TheoTrade for the next 3 months. If you're not completely satisfied, and after you've pulled the trigger on at least 10 trades, if you're not satisfied, we'll give you your $297 back. It's $297. It's nothing. TheoTrade.com/edge. Get results, take action, enroll for TheoTrade. There's absolutely no risk for the first 30 people in this evening. Now, I'm going to answer a couple of more questions. I'm going to pop back up this page. Bear with me here momentarily, because I know there's a couple of questions, obviously, that come up throughout the course of the evening. All right, so it's TheoTrade.com/edge. You can always email us tonight, support@TheoTrade, but the easiest way to get a hold of us right here. We are here, okay? Stacy's on, Jeff's on. You can chat with them now. Put your name, your email address, and you're off and rolling in here. All right, a couple of questions that I want to get to right now. All right, one of the first ones that came up. What if after earnings the stock barely moves? It happens from time to time, all right? You could have a losing trade. It's okay. The entire course of the guide to maximum edge trading earnings, is very suggesting that you should have, X number of losing trades. What we do is losing trades, you're going to find out real quick. That's okay. They're going to be overcome, by very large percentage gains on the winners. That's what butterflies are about. We're playing target practice. It only takes a handful of hits to make it worthwhile, All right. By the way, Gary asked a great question. It says, it sounds like the market is being controlled to meet those numbers. Gary, you're not far off when it comes to expected moves and ranges. If the marketplace anticipates $6 of risk higher or lower, there is an incredibly high probability of moving $6 higher or lower simply because that is where the risk, drives the stock to. What a lot of people don't recognize about options is very often in the options market, it is the cart leading the horse. That means that the options market is often dictating how the stock is going to move after the earnings. But there was another great one that came in. Somebody said, what's the best time to enter these earnings trades? That's one of the absolute keys to this entire course. That's one where that's one where I'm going to tell you right now, you go to the course. I'll take you right to the edge of everything I can tell you, but that is definitively criteria, and that's exactly what the course is about. Another question just popped in over here. Said, do you give us the trades, okay? Or are you only the training? No, we trade with you. All the trades I just showed you were done live in front of people. Of course we trade with you. I'm not the type of individual that just, yeah, here's a class and you go about your day. That stuff's ridiculous, okay? Got to put your money where your mouth is. Everything we do is real time. It's trades. And we'll fire those trades out to you. By the way, when it comes to the earnings trades, there are a ton of them that I will do. I like to do butterfly, because they're cheap shots, okay? And it's worth it when you take those cheap shots out there. So I know a lot of you guys are enrolling right now. I'm going to be answering some of your questions as you are enrolling. I think I'll thank Dave G from South Carolina, Mark M from Jersey, Michael F from California, Carl T from Wisconsin. There's a couple of like ripping through right now. Mike P from Minnesota. These are all individuals that are enrolling right now. Just wanted to thank you guys. And each of you, as you are enrolling, Joseph M from, I can't even see the edge of that one. As you are enrolling tonight, recognize that you just hop in the chat room tomorrow morning. I'm in there first thing in the morning. We get off enrolling at about 8:22 Central Time. That's 9:22 Eastern. It's bright and early. 6:22 in the morning Pacific is when we actually start broadcasting, and I'll be first on the docket for tomorrow. So that's again for Dave, for Mark, for Michael, for Carl, for Mike, for Joseph, for Jim G from North Carolina. Looks like Ramesh from Maryland, Anthony M from California. Thank you guys all. I think it's Wilhelm D from California, Jose from Mexico. Nice. Join us in the morning. And by the way, feel free, when you get in there tomorrow morning, even before we start, ask a couple of questions. There's members in there. Okay. We'll have plenty of support and our crew in there. All right. I'm going to answer a few more questions and then we're going to call it a night over here. All right. So Gary was also asking in here, can the expected move also be half one way or the other, or half the other way? So Gary, it doesn't work quite that way, and we'll explain precisely why in the course. A lot of what we do here at TheoTrade is specifically me, is very, very quantitative. And as such, you're going to get a great feel for what those expected move ranges and all the different aspects you can use them. Like we're using expected move in this case to place a butterfly, but you can use expected move to gauge risk. You can use expected move in the S&Ps, right? In the S&P 500 to say like tonight, we moved down to the edge of expected move in the S&Ps tonight, okay? Again, I'll thank everybody for that's enrolling right now. We're almost to the 30 people here. Larry L. from Alaska, thank you. James Q. from Florida. Greg S. from Washington. Jerome A. from Wisconsin. I want to thank everybody, again, for tuning in tonight. I'm trying to do my best to get answered to all of these questions. I'm actually going to type answers to the remainder of some of these questions that are coming in here because there are so many pertinent questions this evening. Again, it's theotrade.com/edge. I've had a great time tonight. I hope you guys did as well. Please join us here at TheoTrade. Thanks, everybody. Have a wonderful evening. Bye-bye.